Joining me now to discuss is Senior Research Fellow at the American Institute for Economic Research, Paul Mueller. Thanks so much for the time tonight, sir.
Thanks for having me.
All right, so when I've been asking this of all my economic guests, do you think Powell is setting interest rates based on politics or good research?
Well, it's a fair question. I think it's a little bit of a mix of both. The cuts that he made right before the election were surprising and seemed potentially political in nature. But on the whole, I don't see Powell playing a super political game. I mean, he's kind of in a damned if you do, damned if you don't position, in the sense that if he lowers rates, it'll look like he's doing what Trump wants. If he doesn't lower rates, it'll look like he's doing what Trump doesn't want. And so he's kind of in a pickle here. And I think they're just going to be moderate here in terms of lowering rates at the schedule that they had set later this year. So I don't see, I mean, if you were to raise rates, that would clearly be a political move.
Okay, so what's the metric here? I mean, the markets have been doing well. Unemployment's low. Inflation might have ticked up a little bit, but certainly down over the past 4 years. What is Powell looking at when he makes his determinations?
That's a great question. I mean, I think the bigger question, and what I've been asking myself and my colleagues, is where should interest rates be, right? Are they too high right now? Certainly the president would like them to come lower to stimulate more economic activity. But as you mentioned, markets are doing well. Stock markets are up. The economy seems to be growing. Inflation is coming down, though it's still above their target. And, you know, the interest rates, though they're high compared to the Obama and Biden years, they're not that high by historical standards. So I'm not quite sure what the rush is here to try to lower interest rates really quickly again. Again, I think President Trump would love to see sort of a boost to short-term economic activity, but it's not clear that the interest rates we currently have are really slowing it that much. The rest of the president's agenda seem to be driving economic growth, even with rates where they are. So I think moderately coming down is fine, but I'm not sure why we should expect rates to go back to post-2008 crisis level.
All right, so let me move on to this. You know, during the lockdowns, we didn't see the media racing out to interview small business owners who were losing their operations and their livelihoods. But now with the tariffs, they'll find an importer or somebody. They're going out and finding the stories of people who are adversely affected by tariffs. But the question is, and of course, if it's somebody else's ox being gored, but we went through 4 years of lockdowns and inflation and all this awful stuff under Biden. If Trump can negotiate better deals, will the temporary pain have been worth it?
Well, I hope so. And, you know, it's interesting seeing the kinds of deals that are coming out. And we'll, you know, for example, the president announced earlier this week a deal with with Indonesia, rather. And he claimed that Indonesia basically will not put any tariffs on U.S. goods. And that's a big improvement. I mean, he still was saying there'd be something like a 19% tariff on goods coming from Indonesia. And so we can talk about whether that's sort of the best, you know, market outcome over time and whether there's inefficiencies. But to be lowering the tariffs that other countries charge on U.S. goods, that's a big win. That's a priority for the president. He seems to be getting that, although, again, a lot of trade deals haven't been finalized yet. So as much as he can get that, that's good. I would love to see low tariff rates on other countries that open their borders to U.S. goods. I'm not sure the president intends to get their tariff rates to zero, even if they put zero rates on us. But certainly if we can get to low 10% or below, that would be a good move. So to answer your question, we'll have to see what the final details are. But yes, if he can improve the trading regime, that can have really fruitful long-term consequences for citizens in the U.S., for U.S. businesses. And so I can understand what he's trying to get at here, and I hope that he's able to land many of these deals soon.
All right, I got a little less than 90 seconds. A lot of people are saying, well, Reagan wouldn't have done this. Reagan didn't like tariffs. Well, China in 1980 and China in 2025 are two different things. Wouldn't you agree?
That's right. And, you know, the question that is not always, or the distinction that's not always made is, what are we using tariffs for? Are we using them for geopolitical interests? So in this case, we're concerned about the Chinese regime stealing technology, engaging in unfair competition, doing other kinds of things that are harmful to U.S. interests. So in that case, tariffs might be a geopolitical tool, much like they could be used against the Soviet Union in the Reagan years. Or are we saying that tariffs are a major economic engine and driver? And the president kind of goes back and forth on this. And I think as a geopolitical tool, tariffs are a reasonable way to go about that. But when it comes to boosting the economy, I like other parts of the president's agenda much more. The lowering taxes, cutting regulation, cutting the size of government, promoting energy development. All of those things are tailwinds for the economy. And I think that's why the economy seems to be doing pretty well at the moment.
Well, and one of the things I've been saying when they say, how is he going to repatriate these jobs if labor is more expensive than other countries? Well, if you continue to lower corporate taxes, that'll offset the cost of labor and encourage more companies to bring their manufacturing home to the United States. I do have to leave it there. Thanks for the time tonight.
Good to be with you.